Welcome to TheoTrade. This is Don Kaufman. Here we are. It is March 21st, 2016. Welcome to spring. This evening, we kick it off with the fact that the S&Ps are massively unchanged in the day. Well, we grind slightly higher. Here we are with just about 2 minutes to go left in the trading day. The S&Ps are up about 4, but it has been an extremely quiet trading session today. If you do look at S&P contracts, you don't necessarily have to trade them to look at them, right? If you look at the S&P contracts, they've done about 1.2 million contracts today. What does that mean, ladies and gentlemen? It means incredibly light volume over here. Even if you look back to last week and the week before that, which was relatively slow, nowhere near what we're seeing ultimately today. So what's really taking the toll on the markets? Well, yeah, some people might be on spring break, but no, I blame March Madness. Come on, it has to be. And you know, your bracket is already blown up with Michigan State. At least mine was. Anyway, March Madness, it really does take its toll. I spent 15 years in the brokerage world, and really during last week and this week, we might as well shut down the marketplace, because in the financial industry, it's like everybody. Oh, that's it. They're just fixated on their bracket. That's all that matters. But more importantly, on a day like this, markets are a little bit slower. So the S&Ps are up 5, but I don't put much weight behind today's move because, again, only 1.2 million contracts. We did see some action inside of the bond markets today. The bond markets backed off almost 1.5 points in today's trading session. But again, the volume out there is light, so there's not a lot of oomph behind the move. Okay. Nevertheless, I thought this was a prime day to discuss efficiency of the marketplace, only because, again, there's not a huge amount of action on your screen. I mean, the financials, they're pretty much unchanged in the day. Apple, what did they do today? Well, they had a major news announcement. What was it? They presented new products. It's an iPhone, but smaller. Ooh, it's an iPad, which they had a larger version just recently announced, but now it's a smaller version. Wait, I thought they actually had a smaller version. They do, but this is the iPad Pro smaller version. Does it come with a smaller pencil? No, you have to buy that separately. Nevertheless, I'm done poking my fun at Apple there. Okay, I think they have finally covered the spectrum of sizes. We have a big phone, we have a small phone, we have a smaller phone with a smaller iPad. There's the bell. With that, let's go to the SPX and talk a little bit about efficiency of the marketplace. And if you take a look at this, we have a 2-day option. I'm going to close up the left sidebar because, again, the futures are almost unchanged. Obviously, I'm trading a little bit today, trying to execute a couple of orders over here. Everything expired on me. I didn't fill a lot of orders. Okay. Here we actually have something unique, and it's worth taking the time to look at this, regardless if you've traded options or not. There is an incredible efficiency that exists in the markets today. It's worth discussing here, and it's worth kind of digging into a bit of detail because I think it can make you more effective. Again, whether you trade stocks, whether you trade options, whether you trade futures, if you're even brand new to the market, take a look. Okay, the SPX happens to be an options-only product. But again, I don't want to digress too much. You don't have to trade options to appreciate what the SPX options are ultimately telling us. Okay, so let's dig into a bit more detail. What are the SPX options ultimately telling us? Well, there's a Wednesday expiration now, and that Wednesday expiration, it was just recently added. It's added as a weekly. Okay, so yes, there's like a midweek expiration, then there's an end-of-week expiration. But what is unique this week is that Friday, the market happens to be closed for Good Friday. So what you're actually getting is right here is the Wednesday expiration. Right here, okay, happens to be the Thursday expiration. You're like, okay, great, I get it, Don. One day is Wednesday, one day is Thursday. The efficiency in the marketplace, though, is such that if you look at the right-hand side of the screen, these implied volatilities, okay, they're accurately describing how risk is being priced. Because this option, this is it. This thing expires on Wednesday. And this option, this is it. It expires on Thursday. The slightest differentiation from one implied volatility to the other, okay, which in this case is what? It's only about 0.7% differential from one expiration to the other. And you're like, well, what does 0.7 amount to? You can actually see that on the screen. And why am I bothering spending time on this? Clearly, there is some type of announcement that's causing, okay, the slightest bit risk to be increased in Thursday versus Wednesday. But the point that I'm trying to make is the implied volatilities today, they don't lie. There are hundreds of millions of dollars being traded in these options. I mean, the SPX is kind of the granddaddy of all the option markets. And this is not something that has to be just entertained or explored on the SPX, but it's a prime example. Look at this, 8,000 contracts of a $2,045 product. That is tens of millions of dollars at our risk in these options. And all the options being traded, all they're doing is putting a price tag on risk. And the efficiency comes in which there are so many people today that are trading these options. The options are dictating to you, okay, what charts do not. And that is the options are actually giving you a price to risk. What? 3 days from now, 2 days from now, it's telling you, okay, there's less risk being priced in by Wednesday versus, for instance, how much risk is being priced in on Thursday. And you can even put that into pricing terms, meaning the SPX is expecting a $15.76 move. That is a normal, okay, or what they term expected move. It's a 1 standard deviation move versus on Thursday, there's almost what? A $19.60 expected move. And again, these are probabilities of expiring. So the irony is there's only, okay, about $3-4 more being priced into movement in the 3-day option than the 2-day option. Okay, and again, the efficiency comes into play is that the smallest increase in risk can now be detected by looking at these weeklies. Because again, as I said, the weeklies don't lie. If there's a 0.7 differential, there must be slightly more risk in Thursday. Now, if you actually went over to the market watch over here and forget about advanced decline line for a moment, you go to a calendar and you actually look like, well, what's going on Thursday morning? Or retail sales, durable good orders. Okay, durable goods can make a difference. It can move markets over there. And that is why there's the slightest bit, again, more implied volatility. So as a trader, what or investor for that matter, what can you actually use this stuff for? Again, it helps you, okay, price risk to the future. All we do is we spend all this time in markets trying to assess, like you're going to look at a chart, you're looking at a MACD and a Fibonacci and a Bollinger Band, everything. You know what the markets are saying right now? First and foremost, at 11% volatility, that is rock bottom vol. We haven't seen vol this low in quite some time, which I have to tell you is the opposite of what I would have expected just a few weeks ago. But volatility is rock bottom right now. It does not go much lower than this. So if you're looking for explosive moves in the market, guess what? The market is telling you the exact opposite. There's hundreds of millions of dollars screaming, we're not doing anything right now. We would rather watch basketball games and March Madness, kind of unfold over here. Come on, there's a degree of truth to that. There's no doubt about it. But that's how quiet markets happen to be. And again, what these implied volatilities do is not only help you, okay, to a degree of predictability as to what the market is expecting risk to be, it can help you, okay, on any individual underlying. You go over to something like Apple. Okay, and yes, I was picking on Apple a little bit. I mean, come on. We got the large iPad, the small iPad, an iPad Pro that's large, but then they came out with a smaller one. Ooh, and a cheap watch. Now the watch is a lot cheaper. Anyway, if you missed the Apple announcement, I just gave you the entire Apple announcement. Smaller phone, smaller iPad, cheaper watch. Done! You just saved yourself an hour and a half of your life. Oh, and they're not unlocking the iPhone. Anyway, if you take a look at something like Apple and you're holding a position in Apple, whether it's stocks, whether it's options, doesn't matter. Do you know over the next 25 days, Apple happens to be expecting just under a $5 move? Now, you can use that if you're holding, for instance, 1,000 shares of stock. You better get ready to be taking a plus or minus approximately $5,000 loss in here. And I say plus or minus because, again, that is undetermined. You don't know if we're going up or going down. But what the marketplace and options is doing is putting that price tag on risk for us to help us, to know what's our comfort level in the markets. Take a look at it. Again, the SPX I think is incredibly interesting given that it's a Wednesday and a Thursday expiration out there, giving us into like that finite detail, if you will, how one day literally differs from another day in terms of risk in this marketplace. With that, again, the rest of the week, clearly they're not expecting much. All right, last day you got to actually trade out of stuff this week is Thursday. So expiration for the weeklies this week is Thursday. Be aware, not a huge amount of news out there this week. Again, the only thing we've got, petroleum report coming on Wednesday. That's during the trading day. That's the oil report. And then, of course, Thursday morning, durable goods. With that, thank you guys very much for joining us here at TheoTrade. S&P's not doing a whole lot during today's trading session. Nevertheless, always an interesting day in the market. Thanks a lot, everybody. Have a good trading evening, and see you guys tomorrow.